Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify, Apple, or Google, please leave a 5-star rating and review. It supports the podcast and it doesn't cost you anything. Well, my friends, the pain continues. We have another bank, another one bites the dust. Signature Bank has been closed. Here's the headline from CNBC from today. Regulators close New York's Signature Bank, citing systematic risk. And of course, in yesterday's podcast, we were talking about this. Will this contagion spread throughout the banking industry? And we're going to start to see more banks over the next few weeks start to collapse. Well, the Fed is taking measures to bail these banks out. I'm going to share the details, but this is another bank that has went under, my friends. It's not looking good. And many of these banks, or the three banks that went under, which is Silvergate, Signature Bank, and of course, Silicon Valley Bank, which is the biggest of the three, they were crypto friendly. Now, the reason they went down was not crypto specific. They were related to the aggressiveness of the interest rate hikes and their investments in bonds, which have failed. So it's a mixture of different things. Yes, some of these banks, such as Silvergate, took a hit from the crypto industry collapses last year, but they didn't go under as a result. It was a combination of different things. So not looking good here, my friends. And I don't want the world to end tomorrow. And I'm not calling for that, but I think we could see a Black Monday like we saw in 1987, where markets just take a massive hit. Maybe there's more news of banks collapsing. I think this is what the Fed wants, honestly. And now they're going to come in and they have their narrative for starting quantitative easing again. So the TLDR here, Silicon Valley Bank depositors will have access to all their money on Monday. Signature Bank is closed. All depositors will be made whole. Fed will make available additional funding to eligible depository institutions. Fed prepare to use its full range of tools to support households and businesses. Once again, quantitative easing will start. Now, Caitlyn Long, who we've been following because she understands and has a pulse on the banking industry and what's happening, she said, QE is back. Fed just bailed out banks. Inflation to keep running hot. Loans of up to 1 year to banks versus U.S. Treasuries, agency debt and mortgage-backed securities plus other assets as collateral. Fed valuing these assets at par. There's the bailout. So the Federal Reserve and the U.S. Treasury, all these folks, they released a ton of statements this weekend. They're essentially bailing out these banks and so forth. And once again, quantitative easing will start. Now, as Caitlyn mentioned, inflation is still an issue. And I think they're not going to be able to get inflation down to 2%, not anytime soon. So they're probably going to have to put the narrative out there that, hey, we're going to, I think if maybe inflation at 5% or 4% is sustainable, they'll put that narrative out, but we need to help these banks which are failing. And we got news, in fact, that President Biden, apparently he's going to address this tomorrow. There's a report here saying that he's going to give a speech on the banking crisis tomorrow morning. So let's see what's going to happen, what he has to say, what they say about crypto, right? That's going to be a big part of this. And here, Caitlyn shared some additional thoughts. She said, federal bank regulators let everyone down. Bond portfolio losses at the three banks that just failed didn't build overnight. In all three cases, state bank regulators stepped in, not the feds. It's time for the feds to greenlight banks holding 100% cash against volatile demand deposits. There's definitely a need to upgrade the system and to move away from fractional reserve banking. I mean, it was just a matter of time before these things collapse and people can't get their funds and you have bank runs, right? So they kept kicking the can down the road, and maybe here's the point of you got to pay the piper, right? Here's the point of, well, that's not going to happen anymore. And as I stated in yesterday's podcast, could this be the introduction of the new CBDC system? Maybe, maybe not, right? But I know they never let a good crisis go to waste. And of course, they caused the crisis. So it's funny how that happens. Now, we had folks in the crypto industry continue to weigh in on these collapses, especially the most recent one, which was Signature Bank. And I'll share what Ripple CEO had to say, what Coinbase was, what Jeremy Allaire, CEO of Circle, had to say as well. But first, Ryan Selkis of Messari said crypto's banking rails have been effectively shuttered in less than a week. Next up, USDC. The message from DC is clear. Crypto is not welcome here. The entire industry should be fighting like hell to protest or protect and promote USDC from here on out. It's the last stand for crypto in the US. So there's certainly, Operation Choke Point 2.0 happening, and they're fighting hard. Do I think they want to kill crypto? No. But I think, once again, this is for the incumbents to come in and take over, your JP Morgans and so forth, and to slow it down. Because crypto has been, just on the rise, growing very fast. The market has just skyrocketed, and a lot of the incumbents are losing control. And one quick item I want to share, and I know this has been a talking point for a long time, but it's kind of making sense. And that is central banks over the past 11 years have been accumulating gold, and even so, more so, I should say, in the past 2 to 3 years, they've been hoarding gold like crazy. And here in February, there was a report that says gold demand surged to an 11-year high in 2022 on colossal central bank buying. So I think they, of course, know that, hey, this system that we're running on with fiat currencies and printing ridiculous amount of money, it's not going to hold up. So we need some hard money, right? At least the scarcity value, which a lot of cryptocurrencies bring to the table, like Bitcoin and so forth. We need to have an asset, a hard asset, right? And they were obviously hoarding gold here. So you just look at all these things in hindsight and you're like, yeah, that makes sense, right? They knew that one day, whether it be in 2023 or 2024, something was going to happen. Now, Ripple CEO Brad Garlinghouse, he weighed in on Silicon Valley Bank. He said, setting the record straight on Silicon Valley Bank questions. Ripple had some exposure to SVB. It was a banking partner and held some of our cash balance. Fortunately, we expect no disruption to our day-to-day business and already held a majority of our USD with a broader network of banking partners. He says, obviously, a lot is still unknown about what happens with SVB, and as is the case with many others, we hope to have more details soon, but rest assured, Ripple remains in a strong financial position. It's ironic that so much of what's happening as soon as some companies scramble to make payroll highlights how broken our financial systems still are. For example, wires are still not 24/7, 365. Rumors led to collapse and the frictions of moving money within a deeply fragmented system. He's absolutely right. And of course, Ripple is trying to bring a solution to solve that with their blockchain solutions, as well as XRP, the neutral digital assets that can be used for cross-border payments and so forth. And Coinbase, they released a statement today. They said, despite the turbulence we have seen in the traditional banking sector recently, Coinbase continues to operate as usual. At Coinbase, all client funds continue to be safe and accessible, including USDC conversions, which will resume on Monday. So that's good to hear. They're going to continue their USDC conversions. They had paused it over the weekend, and the timing aligns with all these collapses. So folks were worried, and especially that Circle had $3.3 billion at Silicon Valley Bank. So hopefully, things proceed as normal tomorrow. They continued here saying all client cash at banks continues to be protected by FDIC pass-through insurance due to the FDIC's hold on signatures transactions. We're currently facilitating all client cash transactions with other banking partners. As of close of business Friday, March 10th, Coinbase had an approximately $240 million balance in corporate cash at Signature. As stated by the FDIC, we expect to fully recover these funds. So imagine if the FDIC or the Fed didn't step in here. It would be really bad for a lot of these crypto companies, right, guys? A lot of money would be lost. But it goes back to The problem itself was created by the Fed and the government, and now they have to come in and solve it. It's really ridiculous. Here, Jeremy Allaire, not too long ago, released a statement about Circle and USDC. He said, update thread on USDC. We are heartened to see the US government and financial regulators take crucial steps to mitigate risk extended from the fractional banking system. 100% of deposits from Silicon Valley Bank are secure, and we will be available at banking open tomorrow. That's good to hear, guys. So dodging a bullet here, right? But once again, this contagion can continue to spread. He said 100% of USDC reserves are also safe and secure, and we will complete our transfer for remaining SVB cash to BNY Mellon. Now remember, BNY Mellon, America's oldest bank and the largest custodial bank in the world. And what did they do last year, my friends? If you recall, they launched crypto custody services. So interesting what's happening here, right? One could argue these bigger incumbents are working with politicians like Elizabeth Warren to kill these or slow down these crypto-friendly banks so that they can come in, the JP Morgans, the BNY Mellon, right? The big players, SVB is a regional bank. It's not like on the same level as a JP Morgan, a BNY Mellon, and so forth. So Jeremy says, as previously shared, liquidity operations for USDC will resume at banking opening tomorrow morning. He says, with the closure of Signature Bank announced tonight, we will not be able to process minting and redemption through Signet. We will be relying on settlements through BNY Mellon. Additionally, we will be bringing a new transaction banking partner with automated minting and redemption potentially as soon as tomorrow. We are committed to building a robust and automated USDC settlement and reserve operations with the highest quality and transparency. He says here, finally, a much longer thread will be coming with some reflections on all of the past week's events. We've long advocated for full reserve digital currency banking that insulates our base layer of internet money and payment systems from fractional reserve banking risk. So, when I read this and I see the move to BNY Mellon and, of course, the Fed coming to bail out these folks, I still have a theory in my mind that USDC could become the digital dollar, the US CBDC. So it's just sometimes I look at this and I look at this, holistically, and I'm like, yeah, it seems like that's the path things are headed, but we'll have to wait and see. But guys, something that's interesting, Bitcoin right now is pumping. It is at $22,000, $471. Wow, right? One would think Bitcoin would be hurting right now, but it's interesting. But Bitcoin was created as a hedge against money printing in the fiat currency system. So maybe the fact that the Fed is making these moves, people are moving into Bitcoin and crypto, right? It's interesting. I don't want to read too much into this because, look, it's not some epic pump that we can write home about, but we'll see. We'll see what happens here. We're seeing a green candle form here on this chart that I've been sharing with you guys on the weekly chart, where Bitcoin, could do its retracement to 40 to 50,000. I don't know if that's still in play because of these macroeconomic factors, but who knows? Could this be a catalyst that, drives more people into Bitcoin? I don't know, but it's certainly a scenario. Anyway, guys, let me know what you think. Interesting things developing here, and let's see what happens tomorrow. Could we see a Black Monday? Maybe the Fed will help stop some of that, and we won't have a Black Monday, but just be prepared for all scenarios, right? We could have rough times ahead over the next few weeks and months and so forth, but we'll see where things go. We'll take it a day at a time. Once again, let me know what you guys think, and I'll talk to you all later.